And welcome to NTD Business. I'm Don Ma. Thank you for joining me here. The IRS refused to pay some stimulus checks during the pandemic, wrongly claiming some taxpayers were dead while they still were alive. That's according to a report from the Treasury's Office or Inspector General. The report says that some taxpayers were told their accounts were locked when attempting to access stimulus checks. The Inspector General says the deceased account lock is designed to prevent the filing of fraudulent tax returns. The office also said that tens of thousands of accounts were deadlocked, meaning that taxpayers didn't get their stimulus payments and were also blocked from filing tax returns or getting tax refunds. According to the report, management said both human and computer programming issues were to blame. And U.S. household budgets may soon get a breather, although it's too soon to declare a victory over inflation. But many economic analysts believe things are heading in the right direction and that the Federal Reserve may hold interest rates steady next month. Here's more.
The average U.S. family spent about $700 more in July compared to 2 years ago to buy the same goods and services, according to Moody's Analytics.
Look at how much parents are paying for materials for children, back to school materials. Prices have gone up. Maybe the rate of increase may slow, but the level has gone up significantly.
The main cause for consumers forking out more money is still high inflation. In an attempt to curb these rising prices, the Federal Reserve boosted U.S. interest rates 11 times since March 2022.
It's no fun. No one likes it. But, if you're going to get inflation back in the bottle, this is part of the process. Good news is inflation is getting back in the bottle.
The CME FedWatch tool says the financial markets believe there's nearly a 90% chance the central bank will hold rates steady in September.
We have a kind of a Goldilocks economic situation where economic growth is slowing without going into a recession.
Another reason for economic optimism, wages are starting to outpace inflation.
Things feel like they're moving in the right direction. Hopefully, 6-12 months down the road, the Fed can start taking its foot off the brakes and lowering those interest rates, and the banking system will, feel a lot better as a result.
Meanwhile, Amazon is trying to crack down on workers who don't go into the office enough. Some U.S.-based employees recently received an email warning them that their in-person attendance is being tracked. The company's return to office policy requires workers to report to an office at least 3 days a week. The message highlights Amazon's determination to enforce its rules amid an employee backlash to the policy. In May, over 1,000 corporate employees staged a walkout to protest the policy, calling the company's approach a rigid one-size-fits-all mandate. Tech giants led the way on adopting remote work policies at the outset of the pandemic, but now many are leading a charge in the opposite direction. Google, Meta, Zoom, and even the federal government have started pushing a return to in-person work. And a judge on Friday revoked Sam Bankman-Fried's bail after finding probable cause that the indicted founder of the bankrupt FTX cryptocurrency exchange tampered with witnesses at least twice. Here's the report.
Sam Bankman-Fried is going to jail. The founder of the now defunct cryptocurrency bank FTX, accused of stealing billions in client funds, walked into a federal courtroom in Manhattan on Friday and learned his bail terms had been revoked. The 31-year-old, who has pleaded not guilty to the charges, has been largely confined to his parents' home in Palo Alto, California, on a $250 million bond since he was indicted in December and extradited to the U.S. In setting the terms of his supervised release pending trial, the judge cautioned the defendant against speaking to the media or contacting potential witnesses. But Bankman-Fried shared the personal writings of a former romantic partner who is expected to testify against him at his October 2nd trial with a New York Times reporter. Prosecutors said this, quote, crossed a line. And on Friday, a judge agreed and ordered Bankman-Fried remanded. His attorney said he would appeal the decision, but the judge denied a motion to delay detention pending that appeal. He was led out of the courtroom by members of the U.S. Marshal Service in handcuffs after removing his shoelaces, jacket, and tie, and emptying his pockets.
And will the cage fight between Meta CEO Mark Zuckerberg and Tesla CEO Elon Musk actually happen? Zuckerberg now says Musk doesn't appear to be taking it seriously, although it may be that the two have a differing vision. The two prominent tech moguls accepted a cage fight challenge in late June, but an actual date was never announced. Musk has said that a live stream of the event would be hosted on Twitter and Meta systems. Zuckerberg says that he offered a real date for the fight and that UFC President Dana White agreed to make it official. But Zuckerberg says Musk won't confirm a date and says Musk needs surgery and asked to do a practice round in Zuckerberg's backyard instead. Musk previously said that he recently got an MRI scan and that there is a problem with his shoulder blade rubbing against his ribs. He said recovery from minor surgery will only take a few months. He wants the fight held in a historic setting in Italy. He also doesn't want it organized by the UFC, but instead by the foundations of the two competitors. And consumers are criticizing a Skittles ad which supports the LGBTQ community. Some say it could negatively influence children. Here are the details.
Skittles is using these 5 new designs in support of the LGBT community. One of the designs shows the sun and the moon walking on a rainbow while holding hands. One has the word pride in various colors, a mouth with the rainbow pouring out of it, and the words bi, ace, lesbian, queer, trans, and gay. Skittles has the slogan, Taste the Rainbow. Its website now states, "We've given up our rainbow so that the LGBTQ community can share theirs." The design getting the most feedback online states, Black trans lives matter and joy is resistance. Dr. Robert Malone pointed out on Twitter that Black Trans Lives Matter is the middle of a cartoon playground full of kids on the package. This is marketing aimed at children. Account Lips of TikTok wrote, Skittles is trying to turn your kids into BLM and LGBTQ activists. Their packaging also features a drag queen. Skittles is a product from the Wrigley Company, which is a division of Mars. NTD reached out to Mars for a statement, but didn't immediately hear back. The new ad was created in collaboration with the Gay and Lesbian Alliance Against Defamation. It's the 4th year Skittles partnered with them. Some are criticizing the campaign and calling on people to stop buying Skittles. Others don't seem to mind too much. One user wrote, that Skittles slogan is Taste the Rainbow after all.
And if you're planning to travel during Labor Day weekend, you might want to factor in rising gas prices. The cost of regular is above $4 a gallon in 11 states, according to AAA. Others are nearing that threshold, and the national average is $3.85. That's the highest it's been in about 10 months, and it's up 2 cents from last week. Oil prices are up because Russia and Saudi Arabia have been cutting the global supply. In the U.S., some refineries are struggling to function in extreme heat. And the ruble slid past 101 per U.S. dollar on Monday, just as President Vladimir Putin's economic advisor said Russia was interested in a strong ruble and that loose monetary policy was the main reason behind Russian currency's weakening. Francis McGuire reports.
The Russian ruble slid past 101 per US dollar on Monday to reach its weakest point in almost 17 months. President Vladimir Putin's economic advisor blamed the slump on the country's central bank. In a sign of growing discord among Russia's monetary authorities, Maxim Oreshkin said soft monetary policy had weakened the ruble and accelerated inflation. He further wrote in an op-ed for Russia's TASS news agency that he wanted a strong ruble and expected a normalization soon. Oreshkin's intervention could push the central bank into action ahead of its next scheduled interest rate decision in September. Economist Ian Melkumov said the central bank faced some tough decisions.
At least for the past several weeks, everyone was expecting that, okay, the ruble slide shall stop somewhere pretty soon because it's overshot its objective market levels, but the ruble slide continued, and I think it will take some hard decisions by the central bank, like increasing the key rate, the interest rates, by at least a percentage point, maybe more than 1 percentage point, to stop the ruble decline.
The central bank hiked rates by 100 basis points in July to 8.5% after holding steady for months. The bank has been signalling more hikes are needed ahead of next month's key meeting. It's blamed the ruble's sharp slide this year on Russia's shrinking balance of trade. The ruble has lost about a quarter of its value against the dollar since Russia sent troops into Ukraine in February last year. The following month, it hit a record low of 120 against the dollar, but it recovered to a more than 7-year high a few months later due to capital controls and surging export revenues. Before the war, the ruble traded at around 75 to the dollar. To stop the ruble's current slide, Russia could reintroduce tougher capital controls. Another option would be to raise interest rates, which the central bank is already minded to do due to high inflation. But that limits economic growth potential and means higher borrowing rates for the government. That as it tries to fund military operations in Ukraine.
Despite gas prices rising, airfares are dropping. This is as summer travel season wraps up. This is positive news for travelers during this hot, humid, and expensive summer. Airfares reportedly dropping as the travel season wraps up later this month. The latest data from travel site Hopper says the average domestic round trip right now is $257. That's down 11% compared to last year. But experts say prices often drop off late in the summer. Other factors include the lowering price of jet fuel and increased airline capacities. However, the seasonal dip in prices is only for a short time before they climb back up again. And Apple supplier Foxconn reported a 1% drop in second quarter net profit on Monday. This is as global economic woes hurt demand for smart consumer electronics. Here's more.
Apple supplier Foxconn beat estimates for second quarter earnings on Monday. It credited a booming artificial intelligence sector. Foxconn said it had won very high market share for key parts of the AI server supply chain. It further said the company is gaining momentum in servers and believes it can deepen collaboration with North American customers. Earlier, Foxconn reported a 1% drop in second quarter net profit. That, as global economic pain hurt demand for smart consumer electronics. The Apple supplier said net profit for the April and June period slipped to $1 billion. That was slightly down from the same period last year, though still ahead of analysts' forecasts. Looking ahead, Foxconn downgraded its outlook for full-year revenue to slight decline from previous guidance for coming in flat. It expects revenue for its smart consumer electronics products to slightly decline year-on-year in the third quarter. That group includes smartphones and makes up about half of Foxconn's total revenue. The Taiwanese company said overall revenue for the third quarter would also fall slightly.
China's largest private real estate developer, Country Garden, is seeking to delay payment on a private onshore bond for the first time. This is the latest sign of a stifling cash crunch in the property sector. Anxiety about contagion risks is spreading through global markets, putting China's government under mounting pressure to deliver support for the ailing real estate sector. The sector accounts for roughly a quarter of the economy. Country Garden was once considered a more financially sound developer. Its woes could also have a chilling effect on homebuyers and financial firms, with more private developers close to a tipping point if Beijing's support does not materialize soon. The real estate sector has suffered tumbling sales, tight liquidity, and a series of developer defaults since late 2021. Of course, with China's Evergrande Group at the center of the debt crisis. Country Garden's shares dived 18% on Monday, dragging down the Hang Seng Mainland Properties Index, which dropped 3.7%. The stock has lost 50% so far this month. For more on China's property crisis, earlier I spoke to Antonio Cruzeffo. He had some very interesting comments. Take a look. And now joining me here is Antonio Cruzeffo, China economic analyst. So I wanted to start off today with China's property sector. We have news that Country Garden, one of China's most well-known property developers, its shares fell 18% on default risks. What do you think is the biggest headwind facing China's property industry?
Well, I think one of the problems is that the property industry is famously overblown in terms of the prices are too high, the debt is too high, sector has been struggling for 3 or 4 years. So when you have bad press, even though it's justified, but when you have bad press, that then makes the situation even worse because people are even more afraid to invest, even more afraid to buy homes and things like that. You have a lot of people in China that prepaid for construction of apartments, and then if the company that is building the apartment, if they default, if they go bankrupt, if they can't get more money from the bank, they stop the building. So then the owner winds up with an apartment that's not finished, maybe they can't move in, and meanwhile it's, they've invested all their money in it. So people are very much afraid. The other issue is that the property sector accounts for about 20 to 30% of the total GDP. And then we have allied industries, people selling services and goods and things, materials to the construction sector, right? And then these will also be negatively affected when the property sector goes down. So the property sector in China is usually seen as an arbiter of the whole economy. When we see the property sector in trouble, we assume the Chinese economy is in trouble.
And how did this sector become so leveraged?
Well, property sector is always going to be leveraged. You're always going to be building. Construction companies know that they can amplify the number of projects they can do by taking tremendous leverage. So this is always the case. Even in the United States, it's very heavily leveraged. The problem is it's a bit of a Ponzi scheme where the banks can keep loaning out money as long as new money is coming in. If new money stops coming in, eventually these loans, will collapse. Or the same thing with the construction companies. Construction company borrows a bunch of money to build a construction unit, unit A. Now when they move on to unit B, they get more money in. In unit C, they get more money in. And they're sort of like rolling over the debt. Well, they want to build unit D, the fourth one in the series, and suddenly they can't borrow money. Now they're not getting new money in, and suddenly they're unable to make the debt payments on the previous projects they were working on.
And I think a lot of property developers were high on speculation. Can you talk a little bit about that?
Yeah, well, one of the issues in China is that there weren't a lot of things for people to invest in for the longest time. In fact, before there was really a stock exchange, there was, there was real estate, and a lot of people who don't understand the stock exchange or don't understand, investing in stocks, they feel that if they buy real estate, it's very secure. I mean, this is in this country. This is, most of the world is like this. People feel like, well, if I buy a building, I can see it, I can touch it, I can live in it. They feel like it's a solid investment. And so that's how the real estate sector just absorbed, just so much money. And the point that I always want to stress about Chinese real estate is that this is not young people buying homes. Young people cannot afford homes. Apartments in Shanghai are many times as expensive as apartments in New York City, dramatically more expensive than freestanding homes with land in other parts of the United States. So this is not a young married couple buying a house. This is a young married couple receiving the lifetime savings of all 4 parents and all 8 grandparents, giving them all the money to buy this one apartment.
And can you talk a little bit about state intervention in terms of policy? Because this goes back a few years now. And when China wanted to rein in the amount of debt that was in this space, it actually led to a default eventually of Evergrande, and we all know about that.
Yeah, well, Xi Jinping had this slogan, which was houses are for living in, not for speculating. Because what happened was real estate became the best investment. You invested money in it, and it went up. It just always went up, and it outpaced most other things. And as I said, people understood it, because not everybody understands the stock market. So they put their money in real estate, it kept going up. They put more money in real estate, it kept going up. But the problem is, if everyone's investing in real estate, it drives up the prices of the homes. And then the homes were becoming unaffordable. So people complained, I can't afford to buy a home. And I can't afford to buy a home that I'm going to live in and raise a family. I can't buy that because some rich guy is speculating and he bought 10 homes and isn't necessarily even living in them. So Xi Jinping was saying, homes are for living in, not speculation. We want to rein in real estate. Well, one of the problems with reining in anything in terms of some type of price controls is that, let's say that Xi Jinping said, right now apartments are $500,000, and we estimate most people can afford $200,000. So we'll force the sellers to come down to $200,000. Well, if they put a price cap like that on real estate on any product, people just don't sell it. It just comes off the market. And so what winds up happening is you create a shortage. And the other problem is that these real estate, these house prices, the $200,000, $300,000, $400,000, $500,000 inflated house price, winds up being the collateral on the next set of loans. So if you force me to sell that house at $200,000, but I have $500,000 of debt against the value of that house, now I'm going to wind up, if I'm the developer, I'm going to wind up defaulting on the loan. I mean, this is basically what happened here in 2008, or very similar to what happened here in 2008. So it becomes very difficult for the government to control the price of real estate.
And I think earlier you touched on a very important point, was that only older people are buying homes, and that's really at the core of the problem, that China needs more people to purchase homes. And if they can't do that, then at the core, the problem cannot be solved.
Yeah, no, I totally agree. I don't see a solution. I really do not see a solution, because government intervention, which is what China always wants to do, will just make the situation worse. Market factors have to solve this problem. You can't have the government step in. If they put a price cap on real estate, there would suddenly be shortages and defaults everywhere. So what can the government do? And now let's couple this with other problems in the economy. Right now you've got 21%, a little over 21% youth unemployment. Well, who normally buys houses? Young people. You graduate college, you get a job, you marry your college sweetheart, you move into an apartment, and you have one child. Now you're allowed to have 2 or 3 children. Nobody is going to have 2 or 3 children if they can't move into an apartment, right? So these kids are living at home, they can't find a job, they're probably not going to get married. So now what's going to happen to this aging crisis in China? I think this is going to accelerate it.
A few weeks ago, I think we heard of the term full-time children. And I think that speaks a lot to the state of the Chinese economy. Maybe you can comment a little bit as well on how this has affected China's economy, this crisis within the property sector, because according to some estimates, it accounts for as much as 30% of the Chinese GDP.
Yeah, it's at least 30% directly, and then indirectly accounts for more. Think about this: drivers, truck drivers, delivery people, factories that are making the rebar and the things you need to build the buildings, refiners, the concrete. So I mean, this is all the way through the economy, and I've seen crazy numbers that said 1 in whatever 5, 1 in or 2 in 5 maybe people, their employment is dependent on the real estate sector. So, and at the end of the day, real estate is just people within the country changing money from one pocket to another. So really, this isn't growing the economy anyway. What you really need is the exports, and China's exports are down. So the real estate sector really cannot save the economy. It could probably buoy it for a time, but again, it's a Ponzi scheme, because like I said, you're borrowing money against a property which has an inflated value. The property maybe is worth 200, it's on the market for 500, so I can borrow 500 now, right? And then this 500 goes into the economy and it creates jobs and does whatever. But at the end of the day, this is backed by nothing. It's backed by a property that's worth $200,000, and it's worth nothing if nobody can afford to buy it, right? So I don't see how the real estate sector can save the economy. I don't see how Xi Jinping can save the real estate sector. So what does China need to do? Well, they need to export more products, and they need to move up the value chain and start exporting more expensive products, technology products, things that bring more value to the country. And China is failing to do that. And in fact, factory activity is down and exports are down.
So when you say save the economy, what do you mean by that? Save it from what?
Well, I don't want to say collapse, because I never predict that the economy is going to collapse. But let's say save it from going into a significant downturn that would be prolonged. Think about this. You got 21%, more than 21% youth unemployment right now. It's August now. Universities are starting probably next week in China. In June, 11 million more kids are going to graduate college. Do you think the Chinese economy is going to create 11 million jobs by next June? Probably not. So that number, that 21.3 or whatever, is going to increase even more. If those kids can't get jobs, they're not going to get married, and they're not going to have kids, and they're not going to buy a house, and they can't afford to buy a house. So where are we? You're going to have all these single children living at home with their parents. That's not helping the economy. So the only hope really is that you can create well-paying jobs for the young kids. If you have well-paying jobs for the young kids, they will go to work, they will earn money, they will get married, they will buy a house, they will have a kid, and then hopefully 2 kids, and save the sort of aging crisis that's happening in China.
So do you think the narrative that China's pandemic recovery is slowing, do you think this is just the tip of the iceberg?
I think that the pandemic, of course. First of all, I never believed in pandemic recovery, but what the pandemic did was the pandemic did permanent damage to all the world's economies. And I get very frustrated when anybody talks about any country saying, oh, they're back to where they were in pre-pandemic levels. Like, wait a second, what you're saying is we're back to where we were in 2019. You're missing the point that we lost 3 or 4 years of growth, right? So nobody's back, and China least of all. And China's economy is not recovering.
Yeah, that's a good point, because you lost 3 years. You have to first make up those 3 years, and then on top of that, grow in order to be in the trend that you're supposed to be in.
Right.
So where do you think deflation is coming from within China?
Well, deflation basically winds up happening when the people, the citizens, cannot buy the products at the normal market price. And it becomes so endemic that then prices have to come down. And that's what inflation is. So basically when we say, that's what deflation is. So when we see deflation, we generally think this means there's a significant downturn in the economy, a significant downturn in employment. So for example, China's unemployment, overall unemployment numbers are actually not that bad. But if we look at youth unemployment, of course, it's very high. And the other factor that we need to look at is how many hours are the factory workers and contract workers working, and how many of them moved from being what we'd call in the United States a W-2 employee, a regular full-time employee of the company, moving from that to being an hourly employee. Because that's the first step. When your economy starts slowing down and you start making less stuff in your factories, you may actually keep the same number of workers because you don't want to fire them, but you reduce their hours. And they go from working 10 hours of overtime to no overtime. They go from working 40 hours to 35 hours, and it just keeps decreasing. And I have read statistics on the earnings. So if we look at what the factory workers earning at the end of the month is now considerably less than it was before the pandemic.
There's talks of whether Beijing will pull the stimulus trigger. Do you think that's going to work?
It's possible. Beijing will try everything, I think. I think there will be some sort of stimulus. The experience in China is that the stimulus has not worked. The only thing that's ever worked to sort of jumpstart the economy in China has always been infrastructure investment by the government. But as far as like stimulus, sending out checks or something like that, it's nonsense. I mean, you're taking money out of one pocket of the government and putting it in the other pocket of the government. And in China, we also saw that during the pandemic, people were afraid to spend at all, and that's not going to change. And if you start sending out stimulus checks, the smart people all realize, well, you're only doing that because we're in a really bad economy. So it further, causes them to lose confidence in the economy.
Where does Beijing get most of its revenue? Foreign investments or domestic produced revenue?
It would definitely be domestic, but foreign investment is significant in China. And this year we're seeing the lowest foreign investment, I believe, in history or since the economy has opened. Part of that is because the United States raised our interest rates, which diverts investment from China to the United States. But a lot of it is because the risk of investing in China is just so much higher now, and the potential reward is so much lower because of things like deflation. Think about that, there's deflation. So do you really want to invest money in China, open a factory, make products and sell them when you might find out that you have to sell them at a price lower than what you were anticipating, or possibly lower than it costs to manufacture them?
Is China's revenue domestically decreasing as well?
You mean for total sales?
Tax revenue?
Tax revenue, I'm not sure. Definitely, I know that consumption is down. So consumers are spending less money. Tax revenue, I'm not as certain.
All right, so all these things that we talked about, these headwinds that's facing the Chinese economy, what's the way out?
What's the way out? So China needs to open factories tomorrow that make high-value products that the world wants to buy, create jobs for all the young people in those factories, and then earn money on exporting those products abroad. It's probably not going to happen.
How can China sell products to other countries who are facing potential recession, right? If the global economy goes down and China's an export economy, I mean, who's going to buy?
Right. That's a real problem. That's a real question. That's a real problem. The United States has inflation still. Around the world, the economies are slowing. They're very sluggish. Some of the countries, their growth is flat. How many Chinese products could they possibly buy? Plus, there's a feeling in the world, the opinion towards China is, of course, decreasing. It's becoming more negative. The people don't necessarily want to buy a Chinese product. And I know a lot of Americans are willing to spend the extra dime to buy, the American product or the non-Chinese product. So yeah, that is a very good question. How can China have an export-led growth if nobody wants to buy their exports?
Do you think there's something that needs to be changed fundamentally? I'm just throwing ideas out there. For example, if China goes into a democratic route, I mean, what are your thoughts? What needs to change?
That would certainly help. I mean, one of the reasons that people are afraid to invest in China right now is because of the national security law, national intelligence law, and the foreign policy law, all three of which make a lot of just normal business activity by foreign companies illegal or potentially illegal, or where you could be arrested. And so the risk now of investing in China is very high. There's a push, among the CCP for nationalism and to get people to buy Chinese products. So again, would you invest in China to sell your products if you know that people are going to boycott foreign products? So all these things would need to change in order to save the economy. And of course, if they move to democracy, to an open economy, to an open society, of course that would help a lot.
Beijing always wants to, do something, right, to change, to fix a problem. Some see that as state intervention. Would you say a more capitalistic economy would benefit more, as in China just needs to let go?
Oh, absolutely, yeah. If the CCP let go tomorrow and just let go of the economy, yeah, it would do much better. And you know what the proof is? We have proof. We know that once China opened the economy, the majority of the growth was driven by the private sector. The private sector was able to drive the growth even though it represented a smaller percentage of the economy.
So China's current trajectory, maybe just last question, where is it headed?
I think China's headed down. I don't believe it's going to collapse. I don't think it's going to disappear off the earth. I just believe, though, that the economy will trend downward. Eventually, it will sort of flatten out, and I think we'll see some sort of normalized growth moving forward, whatever that's going to be. It's not going to be 7 or 6. It might be 5. It might be below 5. It might be 3.5. I believe this year India is actually projected to grow more than China, which is reasonable. India is growing. China is struggling.
Well, all right, Antonio Cruzeffo, pleasure speaking with you.
Thank you.